Question 1. Policy structures. Which of the following is true regarding the replacement cost provision in a homeowner's insurance policy? A. Replacement cost only covers the depreciated value of damaged property. B. Replacement cost is the amount required to repair or replace property with similar kind and quality without deducting for depreciation. C. Replacement cost is the same as actual cash value but with a different name. D. Replacement cost is limited to the original purchase price of the property. Answer B. Explanation. Replacement cost is designed to cover the cost to repair or replace damaged property with materials of similar kind and quality without deducting for depreciation. This provision ensures that the insured can replace their property to its pre-loss condition without financial loss due to depreciation. In contrast, actual cash value (SCV) deducts for depreciation. This concept is supported by most homeowners' insurance policies and is in line with Maryland insurance regulations, which emphasize the importance of understanding the value of coverage to adequately protect the insured's property. Question 2. Coverage types. Which of the following best describes loss of use coverage under a standard homeowner's policy? A. Coverage for the cost of repairing or replacing damaged personal property. B. Coverage for medical expenses for guests injured on the property. C. Coverage for additional living expenses incurred when the home is uninhabitable due to a covered loss. D. Coverage for damages to other structures on the insured property. Answer C. Explanation. Loss of use coverage D provides financial assistance for additional living expenses incurred by the policyholder when their home becomes uninhabitable due to a covered loss, such as a fire or storm. This coverage ensures that the insured can maintain their standard of living while their home is being repaired or rebuilt. It does not cover repairs or replacement of personal property or structures, nor does it cover medical expenses for injuries. Question 3. Scenario-based. Mr. Thompson has recently discovered that his homeowner's policy does not cover flood damage, which is a significant concern given the recent heavy rains in his area. What should Mr. Thompson do to address this situation? A. Continue with his current policy, as flood damage is typically not covered under standard homeowners insurance. B. Contact his insurance company to request a policy change that includes flood coverage. C. Cancel his homeowner's insurance and purchase a new policy from a different provider. D. Wait until the flood risk subsides before addressing the issue with his insurer. Answer B. Explanation. Since flood damage is commonly excluded from standard homeowners insurance policies, Mr. Thompson should contact his insurance company to discuss adding a separate flood insurance policy. Many insurance companies offer flood insurance through the National Flood Insurance Program, NFIP, which can provide coverage for flood-related losses. Simply continuing with the current policy or cancelling the policy is not advisable, as it does not address the gap in coverage. Waiting until the flood risk subsides is also risky, as it does not solve the underlying issue of inadequate coverage for potential future flood events. Question 4. Insurance principles. Which of the following best describes the principle of what most good faith in an insurance contract? A. Both parties must act honestly and disclose all relevant information to each other. B. The insurer is required to cover all possible types of loss, regardless of the details of the contract. C. The insured can withhold information about previous claims without affecting coverage. D. The insurer must automatically adjust premiums based on changes in the insured's risk profile. Answer A. Explanation. The principle of what most good faith requires both parties in an insurance contract, the insurer and the insured, to act honestly and disclose all relevant information. This principle ensures that the insurer can accurately assess risk and set premiums accordingly, and that the insured receives fair coverage based on true full information. Failure to disclose material facts can result in the denial of claims or cancellation of the policy. Question 5. Maryland-specific regulations. Under Maryland state regulations, what is the maximum time frame an insurance company has to acknowledge receipt of a claim from the policyholder? A. 5 business days. B. 10 business days. C. 15 business days. D. 30 business days. Answer B. Explanation. According to Maryland state regulations, an insurance company is required to acknowledge the receipt of a claim within 10 business days. This requirement ensures that the insurer promptly informs the policyholder that their claim has been received and is being processed, which helps in maintaining transparency and managing expectations throughout the claims process. Question 6. Policy structures. Which of the following is NOT typically covered under a standard homeowners insurance policy? A. Damage caused by a falling tree. B. Loss of personal property due to theft. C. Damage resulting from an earthquake. D. Liability for injuries occurring on the insured property. Answer: C. Explanation. Standard homeowners insurance policies generally exclude damage caused by earthquakes. Earthquake coverage is typically available through separate endorsements or policies. Damage from falling trees, theft, and liability for injuries occurring on the insured property are commonly covered under standard homeowners policies. Policyholders concerned about earthquakes should consider adding specialized coverage. Question 7. Coverage types. In a homeowner's insurance policy, what does other structures coverage typically cover? A. Damage to structures not attached to the dwelling, such as a detached garage or shed. B. The cost of repairing the primary residence. C. The personal property of the insured inside the dwelling. D. Liability claims for injuries occurring outside the insured property. Answer: A. Explanation. Other structures coverage. Coverage B typically covers damage to structures not attached to the primary dwelling, such as a detached garage, shed, or fence. This coverage extends to structures on the insured property that are separate from the main residence. It does not cover the dwelling itself, personal property inside the home, or liability claims. Question 8. Claims process. When a claim is filed, which of the following is the insurer NOT required to do under the claims handling regulations? A. Provide a written explanation for any denial of the claim. B. Provide a detailed itemized list of the damages and the settlement offer. C. Pay the claim within 60 days of receipt of all required documentation. D. Automatically approve the claim if the insured has been timely in reporting it. Answer: D. Explanation. While insurers are required to provide a written explanation for claim denials, a detailed itemized list of damages, and pay claims within a reasonable time frame after receiving all required documentation, they are not required to automatically approve a claim simply based on timely reporting. Claims must be evaluated based on the policy terms, coverage limits, and the nature of the loss. Question 9. Policy provisions. Which of the following best describes the purpose of a deductible ECA homeowners insurance policy? A. A deductible is the amount the insurer will pay for a covered loss. B. A deductible is a predetermined amount the insured must pay out of pocket before the insurer pays the remaining amount. C. A deductible is a discount applied to the premium based on the insured's claim history. D. A deductible is an additional coverage option that increases the policy limits. Answer: B. Explanation. A deductible is the amount the insured must pay out of pocket before the insurance company begins to cover the remaining cost of a covered loss. It is a cost-sharing mechanism designed to lower insurance premiums and reduce the frequency of small claims. It does not represent the insurer's payment amount, a premium discount, or an increase in policy limits. Question 10. Risk assessment. If a property is located in a high-risk flood zone, which of the following is the most appropriate action for a homeowner concerned about potential flood damage? A. Increase the coverage limits on the standard homeowners insurance policy. B. Purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP). C. Rely on the homeowners policy's basic coverage, assuming the flood risk will be minimal. D. Obtain a rider to cover flood damage under their existing homeowners policy. Answer: B. Explanation. Homeowners in high-risk flood zones should purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP), as standard homeowners insurance policies typically do not cover flood damage. Increasing coverage limits or obtaining a rider may not address the specific risk of flooding, which requires specialized coverage. Question 11. Legal and ethical considerations. Which of the following actions would most likely be considered insurance fraud in the context of a homeowner's insurance claim? A. Providing an accurate list of damaged items and their value during a claim. B. Intentionally omitting information about previous claims when applying for a new policy. C. Reporting a claim promptly after discovering damage. D. Submitting repair estimates from a licensed contractor. Answer: B. Explanation. Insurance fraud involves intentional deceit or misrepresentation related to an insurance policy or claim. Omitting information about previous claims is considered fraudulent behavior, as it misleads the insurer and can impact the underwriting process and the validity of the claim. Accurate reporting and truthful documentation are essential for lawful and ethical insurance practices. Question 12. Insurance principles. Which of the following best describes the concept of indemnity in an insurance policy? A. The insurer provides a financial benefit to the insured beyond the value of the loss to encourage claims. B. The insured is reimbursed for the actual financial loss up to the policy limit without making a profit. C. The insurer pays a set amount to the insured regardless of the actual loss. D. Indemnity refers to the insurer's obligation to cover all future losses after the policy ends. Answer. B. Explanation. The principle of indemnity ensures that the insured is reimbursed for the actual financial loss they have incurred up to the policy limit. This principle is designed to restore the insured to their pre-loss financial position without allowing them to profit from the insurance claim. It prevents overcompensation and ensures fair treatment under the policy terms. Question 13. Coverage types. Which of the following is typically covered under personal property coverage in a homeowner's policy? A. The dwelling itself and attached structures. B. The cost to repair or replace damaged personal items like clothing and electronics. C. The liability for injuries sustained by visitors to the property. D. The cost of additional living expenses if the home is uninhabitable. Answer. B. Explanation. Personal property coverage, coverage C, in a homeowner's policy covers the cost to repair or replace personal items such as clothing, electronics, and furniture damaged or destroyed by covered perils. It does not cover the dwelling itself, liability for injuries, or additional living expenses, which are covered under other policy sections. Question 14. Policy structures. What is the purpose of a policy endorsement in a homeowner's insurance policy? A. To increase the base coverage limits for all perils. B. To exclude specific types of coverage from the policy. C. To modify or add specific coverage options or terms to the base policy. D. To reduce the overall premium of the policy. Answer. C. Explanation. A policy endorsement or rider is used to modify or add specific coverage options or terms to the base homeowner's insurance policy. Endorsements allow policyholders to customize their coverage to address unique needs or risks that are not covered under the standard policy. They can also be used to exclude certain coverages or increase limits on specific items. Question 15. Maryland-specific regulations. In Maryland, what is required for a policyholder to cancel a homeowner's insurance policy? A. The insurer must provide a full refund of the premiums paid. B. The policyholder must give at least 30 days written notice to the insurer. C. The policyholder must request cancellation in writing and meet any specific conditions stated in the policy. D. The insurer can cancel the policy without notice if the policyholder fails to make timely premium payments. Answer. C. Explanation. In Maryland, policyholders must request cancellation in writing and meet any specific conditions stated in the policy. The process for cancellation is governed by the terms of the policy and state regulations, which require that the policyholder follow proper procedures for termination. Refunds of premiums and notice requirements may vary based on the insurer's policies and state regulations. Question 16. Risk assessment. Which of the following is an example of a loss control measure a homeowner might take to reduce their insurance risk? A. Installing a security system to prevent theft and reduce premiums. B. Ignoring recommendations for home maintenance to save on costs. C. Increasing the deductible amount to low monthly premiums. D. Purchasing additional coverage for risks not covered under the standard policy. Answer. A. Explanation. Installing a security system is a loss control measure that can help reduce the risk of theft and other losses, potentially leading to lower insurance premiums. Loss control measures are proactive steps taken to minimize risk and prevent losses, thus reducing the likelihood of claims. Ignoring maintenance, increasing deductibles, and buying additional coverage are not direct loss control measures. Question 17. Claims process. What is the role of an insurance adjuster in the claims process? A. To make final decisions on policy renewal terms. B. To assess the extent of the damage and determine the amount of the claim payment. C. To handle policyholder inquiries about policy changes. D. To provide legal advice on insurance disputes. Answer. B. Explanation. An insurance adjuster is responsible for assessing the extent of the damage or loss and determining the amount of the claim payment based on the policy terms and coverage. Adjusters evaluate claims, gather evidence, and make recommendations for settlement. They do not handle policy renewals, policyholder inquiries, or legal advice. Question 18. Policy provisions. Which of the following statements about an actual cash value is accurate? A. SCV includes the cost of replacement minus depreciation. B. A CV provides a full replacement cost without considering depreciation. C. ACV is the same as the original purchase price of the property. D. ACV is calculated based on market value at the time of the loss. Answer: A. Explanation. Actual cash value (ACV) is calculated as the replacement cost of the property minus depreciation. This method reflects the property's value after accounting for wear and tear, ensuring that the insured is compensated based on the depreciated value rather than the replacement cost. A CV does not provide full replacement cost or market value. Question 19. Underwriting guidelines. What factor is least likely to influence underwriting decisions for a homeowner's insurance policy? A. The age and condition of the property. B. The policyholder's credit history. C. The presence of a swimming pool on the property. D. The policyholder's preference for high-end finishes in the home. Answer: D. Explanation. While the age and condition of the property, credit history, and the presence of a swimming pool are factors that can influence underwriting decisions due to their impact on risk, the policyholder's preference for high-end finishes is less likely to affect underwriting. Underwriting focuses on risk factors that impact the likelihood of loss or claims rather than personal preferences. Question 20. Legal and ethical considerations. Which of the following actions is considered unethical in the context of insurance claims handling? A. Promptly paying claims that are valid and well documented. B. Delaying claim payments without providing a valid reason. C. Offering fair settlements based on the policy terms. D. Communicating clearly with policyholders about their claim status. Answer: B. Explanation. Delaying claim payments without providing a valid reason is considered unethical as it goes against the principles of fair and timely claims handling. Insurers are expected to process and pay claims promptly according to policy terms and maintain clear communication with policyholders. Unnecessary delays can cause undue hardship and are against regulatory and ethical standards. Question 21. Industry trends. Which of the following emerging risks is most likely to impact homeowners insurance in the coming years? A. Increased claims for damage due to climate change-related events. B. The introduction of new home automation technologies. C. A decrease in the overall number of homeowners policies. D. Changes in tax laws affecting homeowners insurance premiums. Answer: A. Explanation. Increased claims for damage due to climate change-related events, such as extreme weather and rising sea levels, are a significant emerging risk impacting homeowners insurance. These events can lead to higher frequency and severity of claims, influencing underwriting and policy pricing. While home automation and tax laws may impact insurance indirectly, climate change presents a direct and growing risk to property insurance. Question 22. Insurance contracts. What is the significance of the utmost good faith principle in an insurance contract? A. Both parties are required to disclose all information about the risks and coverage honestly. B. The insurer must provide coverage for all possible risks without any exceptions. C. The insured can cancel the policy without any penalties at any time. D. The insurer must guarantee coverage for all claims regardless of policy limits. Answer: A. Explanation. The principle of utmost good faith requires both the insurer and the insured to disclose all relevant information honestly and completely. This ensures that the insurance contract is based on accurate and full information, which is crucial for proper risk assessment and fair claims handling. Failure to disclose material facts can lead to policy disputes or denial of claims. Question 23. Policy structures. Under a standard homeowners policy, which coverage is typically responsible for damage to a detached garage? A. Dwelling coverage, coverage A. B. Other structures coverage, coverage B. C. Personal property coverage, coverage C. D. Loss of use coverage, coverage D. Answer: B. Explanation. Other structures coverage, coverage B provides protection for structures on the property that are not attached to the dwelling, such as detached garages, sheds or fences. Dwelling coverage, coverage A, covers the main structure of the home, while personal property coverage, coverage C, covers personal belongings and loss of use coverage, coverage D, covers additional living expenses if the home is uninhabitable. Question 24. Coverage types. Which of the following best describes open perils coverage? A. Coverage that only protects against risks specifically listed in the policy. B. Coverage that protects against all risks except those specifically excluded in the policy. C. Coverage that applies only to named perils and excludes all others. D. Coverage that provides a fixed payment amount for any type of loss. Answer B. Explanation. Open perils or all risks coverage protects against all risks except those specifically excluded in the policy. This type of coverage offers broader protection compared to named perils coverage, which only covers risks explicitly listed in the policy. Open perils policies provide more comprehensive coverage by default. Question 25. Maryland-specific regulations. What is a primary requirement for insurance companies operating in Maryland to ensure compliance with state regulations? A. They must use a standardized form for all insurance policies. B. They must obtain approval from the Maryland Insurance Administration for all policy forms and rates. C. They are required to offer unlimited coverage options to policyholders. D. They must provide a 60-day notice before policy cancellation. Answer B. Explanation. In Maryland, insurance companies must obtain approval from the Maryland Insurance Administration for all policy forms and rates to ensure compliance with state regulations. This regulatory oversight helps maintain fair practices and ensures that insurance products meet state standards. Insurance companies are not required to offer unlimited coverage options, and the notice period for policy cancellation may vary. Question 26. Risk assessment. Which of the following factors is least likely to influence a risk assessment for homeowners insurance? A. The proximity of the property to a fire station. B. The policyholder's income level. C. The property's location in a flood zone. D. The presence of a home security system. Answer B. Explanation. The policyholder's income level is generally not a factor in risk assessment for homeowners insurance. Risk assessments typically focus on factors directly related to the property's safety and vulnerability, such as proximity to fire stations, flood zones, and security systems. Income level does not directly impact the risk associated with the property itself. Question 27. Underwriting guidelines. What is a common factor used to calculate homeowners insurance premiums? A. The property's market value. B. The cost to replace the property and its contents. C. The number of occupants in the home. D. The number of vehicles owned by the policyholder. Answer B. Explanation. The cost to replace the property and its contents, often referred to as replacement cost, is a common factor in calculating homeowners insurance premiums. This reflects the amount required to repair or replace the insured property and its contents in the event of a loss. Market value, number of occupants, and vehicle ownership are less directly related to premium calculations. Question 20. Claims process. Which of the following is a typical step in the insurance claims process? A. The insurer automatically denies all claims without review. B. The policyholder submits a claim form with detailed documentation of the loss. C. The insurer sets the claim amount based solely on the initial premium paid. D. The policyholder must wait for a claim settlement indefinitely. Answer B. Explanation. In the insurance claims process, the policyholder is required to submit a claim form with detailed documentation of the loss to initiate the claim. The insurer reviews the claim and documentation to determine the validity and amount of the claim payment. Claims are not automatically denied, and settlements are typically processed in a timely manner based on policy terms. Question 29. Policy provisions. What is the primary difference between replacement cost and actual cash value in insurance coverage? A. Replacement cost covers the cost of the property at the time of loss, while actual cash value covers the depreciation. B. Replacement cost includes depreciation, while actual cash value provides the cost of new property without depreciation. C. Replacement cost provides a fixed payout, while actual cash value varies based on market value. D. Replacement cost only applies to personal property, while actual cash value applies to the dwelling. Answer A. Explanation. Replacement cost coverage provides the cost to repair or replace the property with new materials without considering depreciation. In contrast, actual cash value (SCV) coverage provides compensation based on the replacement cost minus depreciation. This ensures that a CV reflects the diminished value of property due to age and wear. Question 30. Legal and ethical considerations. What is an example of insurance fraud in the context of claims handling? A. Providing accurate and complete information about a claim to the insurer. B. Submitting a claim for damages that did not actually occur. C. Requesting a review of a claim decision if the policyholder believes it is incorrect. D. Accepting a fair settlement offer based on policy terms. Answer B. Explanation. Submitting a claim for damages that did not actually occur is an example of insurance fraud. Fraudulent activities in claims handling undermine the integrity of the insurance process and can lead to serious legal consequences. Providing accurate information, requesting reviews, and accepting fair settlements are ethical practices.